We want to get down into the national debt and deficit issues. Those are some of the key issues actually driving the economic conversation this election cycle, especially as they relate to which candidates' plans could cost Americans more money in the long run. Eamon Javers and Steve Liesman are both here on set this morning to talk about this. We're going to start with Eamon and then get over to Steve. But Eamon, welcome.
Yeah, good morning, guys. Great to see you in person. This new analysis that we're talking about today comes from the Committee for a Responsible Federal Budget. It was released Monday, and it finds that both candidates' plans will hike the national debt, but that former President Trump's plans would be much worse for the federal budget. According to the group, Vice President Harris's plan would increase the debt by $3.95 trillion through 2035. And former President Trump's plan would increase the debt by $7.75 trillion in that same time frame. Now, take a look at the three scenarios that they lay out here: the expected Trump deficits, the expected Harris deficits, and the baseline forecast under current law. There are big uncertainty ranges here, depending on the assumptions that you make about how the policies would play out. The group estimates that Vice President Harris's plan could increase the debt by anywhere between $300 billion and $8.3 trillion through 2035, while President Trump's plan could increase the debt between $1.65 and $15.55 trillion, again, over that same time frame. Now, the most costly elements of Harris's plan, well, it's extending the Trump tax cuts for those making less than $400,000 per year, which would cost $3 trillion over the 10-year period, and expanding the child tax credit and earned income tax credit, which would cost $1.4 trillion. Donald Trump's most expensive items are extending the full Trump tax cuts, which would cost more than $5.3 trillion over the time frame, and exempting overtime income from taxes, which would cost $2 trillion. So no matter who wins next week, it's going to be bad for the nation's fiscal health, likely. We're talking about massive increases in debt and deficits as long as the eye can see. 2035 is a long time from now.
With this, I have deja vu. This was the same study from 2 weeks ago or 3 weeks ago?
They updated, yeah.
Oh.
They had one early October and updated with
new numbers.
Right.
These candidates are throwing out proposals, right? So you got to keep
literally every time.
But this is the same people, because the ranges were the same. It's either like a dollar of deficit or 40 trillion.
And look, neither candidate's putting out a whole lot of detail around these plans.
Right.
So there are questions about what either of them will get through, depending on the Congress.
Exactly. Yeah. Congress is the big difference maker here. Who has control?
We're going to talk a lot more about this in just a moment. But Steve, why don't we bring you in? You're taking a look at the economic implications of those ever-rising deficits, what that's going to mean.
So what Eamon just told you is what could happen to the deficit, depending on who wins. Here's what's going to happen, even if nothing changes under existing law. The deficit's going to rise as a percent of GDP. Interest costs will soar to continue to be a bigger part of the budget. They already eclipse defense and Medicare spending. One more thing. No one really seems to care, not the politicians and not the broader public. So the economic risks are that surging interest payments force spending reductions in other areas of government, that all the borrowing crowds out private sector investment needed to boost growth and productivity. And finally, the market at some point says no mas. The ever-increasing supply of government debt and auctions fail, or the buyers of debt demand far higher interest rates. Maya McGinnis from the previously mentioned Committee for a Responsible Federal Budget says there is an invisible fence. We don't know when we run out of fiscal space until we do. We might be about to find out. The CBO projects the deficit will climb over the next 10 years by $1 trillion. That's before any of the stuff these other guys add, to nearly $2.8 trillion, or 122% of GDP, debt owned by the public, and interest payments will top $1.6 trillion. To be sure, deficit hawks have warned about troubling outcomes at much lower levels of debt, and those concerns have not materialized. It might be because rules could be somewhat different when you are the world's reserve currency. Whatever the reason, data from our first quarter CNBC All-America Economic Survey shows concern with the deficit is low. Of 14 issues we asked about, deficit ranks just 10th, far below inflation and even below China and corporate taxes. You do have to squint, Joe, in order to see the deficit on that chart. We have to remove a bunch of the 14 even to make that chart fit. Here's the question. Do people not care about the deficit because politicians have not made it an issue? Or do politicians not care because voters don't care? It might be only when the bond market makes clear that the level of debt is unsustainable that anybody ever starts to care about it.
Those invisible fences. I've seen them. They do not work for dogs.
We had a dog last week.
Do they work for the bond market?
Yeah.
I mean, if you're walking by and a Rottweiler
wants
coming
to come
at
out,
you, to worry. There's a fence.
On the other hand, we have a dog down the street who doesn't go past the fence, which is never on it. The fence is never on.
Turned on high.
My neighbor keeps the fence off. But we just had another dog come through the fence.
This is the issue, and I was going to ask the question you put at the end. Is this because voters don't care about it because politicians won't talk about it, or politicians aren't going to talk about it because the voters?
When you got people going around
an election,
when you got people going around the country saying, "Here, you take this, you take that, you take this,"
free money,
and there's no blowback. At least the Committee for Responsible Federal Budget is trying to put it on the table, as are we here. That it should be something. Look, I've been sort of a deficit dove over many years. It's been kind of the right call, but then you reach a point where you're like, I don't know what that fiscal space is anymore. What really worries me personally, covering economics, is if we do have a downturn, what is the fiscal space of the government to help?
Look, the way Washington works is that every single dollar of federal spending has a constituency, right? Somebody benefits from that dollar who will scream and yell if it's cut. And so politicians just don't want the political pain of cutting anything. So they come in and they say, we're going to cut waste, fraud, and abuse. And then they go in and they find the waste, fraud, and abuse. And someone is benefiting from every one of those individual dollars, and so they don't do it. Democrats and Republicans, when in complete control, historically in recent years, have not done anything about the deficit. Republicans didn't do it. Democrats don't do it. It's not something there's political will for. So I think Steve is right. It's the bond market, right? Ultimately, if the bond market says you can't borrow anymore, you can't borrow anymore. But we don't want to get
to that point.
Because at that point, it's a very, very ugly fix.
Big problem. Look, there's a question now, even if the bond market cares about this. The New York Times had a story earlier this week quoting an investor saying, like, investors really don't care about the supply of treasuries. It's other things that are driving treasury prices, not necessarily
Can I just tell you,
treasuries
that's been true.
Yeah.
It has been true that you could not make a trade based on supply. Supply was something the market took down, and even people warned about it. I'm not sure that's true anymore.
When did it change? Or what?
I think we know in this case, we don't know that it's changed, but we saw, for example, I can't remember now, was it last August when the Treasury kind of made a mistake and misjudged the market and its appetite for longer-term coupons, and they said, well, here's too much of it, and the market really rejected it. And the Treasury came back and readjusted the tenors of what it was issuing.
There is a piece in the Journal today saying yields are increing on some of these fears. So maybe the bond market is starting to
Sabadra,
which is a little scary.
She said that the coupon, there is something coming soon, near term, about what they have to do.
Tomorrow, Wednesday morning, 8:30. I think at this time we'll have it.
You could actually know that
we'll know what the next quarter of funding
it just seems like it's just too much to try to float, and people are going to say, I want a higher yield.
Can I just say a funny thing? Rick and I have this running kind of argument, well, among other things.
Yeah, among other arguments.
So he comes out and he judges the bond market based upon the indirects and the foreign. He says it's a B or a C. I give everyone an A.
Just
for doing it.
Because they're selling it. I'm like, 65 billion of 10s. Who ever heard of that? They sold it. It's an A.
You're working on pass-fail.
I'm pass-fail. If they sell it, it's good.
Right.
You know, and Rick's like a couple points. Look, he's doing a great job with that. I'm joking about it.
So think about what happens, though. Think about what happens, though, if the bond market says to the U.S. government, you can't borrow anymore, or you can't borrow at these prices anymore.
At these prices. And by the way, they've been going up substantially. It's taking up more and more of our. It's more than defense.
The political shock from that, you're talking about a 2008 style event, I think, in terms of the way people will feel about it. The resentment that people across the country will have toward Wall Street when they sense that big bankers are telling the government that it has to cut all the spending that they benefit from.
How is that the bankers' fault? I mean,
I just think that will be the way it will be perceived in the country politically.
If that's the case, then we have a bigger problem with our electorate being informed about this stuff than it is.
I think we do have.
Let me give the good news, though.